everyone, welcome to another Smaulgld live stream. Today is Tuesday. It is Tuesday night, November 27, 2018. And tonight's topic is an exclusive full analysis of the Consensus Invest Cryptocurrency Conference that just ended earlier today, held in New York City. But before we get to that, let's take a look at our markets for the day. Let's take a look at the gold and silver markets, and we'll take a look at the crypto markets, and then we'll get to our focus of the evening, the Consensus Invest Conference. Well, the gold price, excuse me, went down $8. It was down more than 0.5%. It closed at around $12.14, and currently it's at $12. It's at $1,214.26, and currently in the after hours tradings, it's at $1,213.50. So it's down a little bit, just a little bit after hours. Over at the silver side, silver opened up stronger today, but did not hold on to its gains. And so the silver also ended up being down just a little bit, about the same amount, about 0.6%, to about $14.14 an ounce, and right now it's $14.13 an ounce. What does that do to our gold silver ratio? Well, it doesn't really do much at all. I think it's still around 86 to 1, but let's take a look what it is. Yep, just shy of 86 to 1 at 85.91 to 1. That elevated gold silver ratio. Over at the cryptocurrencies, we had a bit of a rebound today. Bitcoin currently in the last 24 hours is up about 2.5% at 38.20. Bitcoin Cash still struggling at 177, and that's down about 1%. Ethereum manages to hold above 100 at $110.68, up plus 4.5%. And Litecoin big day today at 31.21 at $7.46. Ethereum Classic still way under $5 at $4.50, and up about 6%. All right, let's now take a look at what happened today. There's a lot of information here to digest. I did watch the entire conference, so I'll be able to give you a soup to nuts at what happened and a little bit of analysis. So Consensus Invest is a conference held by CoinDesk in New York City. It's a one-day conference, and brought together a lot of the key players in the space, and also got some good insight from Mohamed ElErian, who is a former head of investments at PIMCO and is now the chief economic advisor to that group. And the biggest takeaway from the conference has to be the institutionalization of Bitcoin. There were a lot of good insights about how it's happening, why it's happening, whether it's a good thing, but clearly it is something that is happening. A lot of money, a lot of effort, innovation has gone into and continues to go into bringing the cryptocurrencies, especially Bitcoin, to a lesser extent Ethereum, and then we're going to see what happens with XRP, i.e. Ripple, as part of this entire move to bring cryptocurrencies into the fold. That is a very common theme, and we're going to go through the specifics of what happened today. And we're also going to review the SEC Chairman Clayton, his point of view on why or whether we will have a Bitcoin ETF and what some of the roadblocks are and how they may be overcome. We're also going to look at what he views as a security, whether he thinks Bitcoin, Ethereum, XRP are securities. But the real common theme was, and there's a lot of information here about the building out of infrastructure, trading platforms, settlement, storage, accounting systems, how to value crypto assets, how to bring it all into the regulatory fold, the creation of stable coins, and so on. So there's a massive amount of money moving into this and has been moving into this space. And it's interesting, it would be a mistake just to look at the price and say, and we've heard this before, every time the price drops down, the crypto naysayers jump in and say, that's it, it's done, it's over, I'm vindicated. I mean, I used that argument back in 2014. The price dropped to 350. I said, see, it's over. The price really has nothing to do with the innovations and the level of investment and the amount of work and intellectual capital and innovation that's going on in the space. The price is not even reflective sometimes of that. Just one thing to keep in mind. Whatever Bitcoin was going to be, is going to be in terms of institutional investment is far further along today than it was last year, 2 years ago, 3 years ago, irrespective of the price. That was another common theme. No one seems to be slowing down on their plans. And again, this isn't a bunch of startups that are trying to institutionalize and beg the Wall Street players to bring it into the fold. These are the Wall Street players themselves. And as we go through each of the synopsises of the talks or the panels, you'll get a sense of who is involved in this. But you've got Fidelity, Goldman Sachs, Microsoft, Vaneck, TD Ameritrade, Nasdaq, the Federal Reserve, the New York Federal Reserve. You've got the SEC involved, the New York Stock Exchange. There's just so many of the big players that are involved in this and that attended the conference and either are weighing in and or are working on projects or investing in this space. So the first thing that we saw this morning was a panel with members of BACT, which included the chairman of the New York Stock Exchange, which was one of the backers of this entity called BACT. And BACT is backed by, as I mentioned, Intercontinental Exchange, which is ICE, which owns the New York Stock Exchange. And Jeffrey Spector was there. He's the chairman of the New York Stock Exchange and the CEO of Intercontinental Exchange. Also appearing with him was Kelly Lafleur, who is the CEO of BACT. And the two of them spoke about Bitcoin and their plans to launch this trading platform, fully regulated, having storage as well. And Jeffrey Spector noted that the federal government has acknowledged that Bitcoin is one of the only tokens of the thousands of tokens that the federal government is prepared to give regulatory certainty to. So that's the reason why they chose Bitcoin to begin trading and the storage. And all this is for institutional investors. And also Starbucks is also behind this company BACT, as is Microsoft. So this is not a small startup. This has been going on, and they've been preparing for this launch for the last 2 years. And it was supposed to be launched this year, December 12th, but they have postponed that until January 24th next year. And they're saying they want to get everything ready, and they're also saying that they've got a lot more customers. So we'll see how that pans out. I suspect there's partially that, but partially also they may not have all their regulatory issues buttoned down. So it'll be very important to see if they do indeed meet that launch date. But they're all very bullish on the launch. And of course, why is Starbucks in there? Well, the CEO of BACT said to be able to give their customers more options in their ability to pay with Bitcoin. So they're looking really for a lot of the holy grail items that the original proponents of Bitcoin were looking for, but now they're putting the full weight of the marketing and the Wall Street behind it, which is mass adoption. Of course, we're going to talk about later what all this means, because a lot of this institutionalization of Bitcoin, and that clearly was the theme of the conference, is somewhat antithetical to the whole concept of Bitcoin being a peer-to-peer type of currency where you eliminate the middleman. But given that there is institutional interest in what they're calling now a new asset class, they need to have all of this regulation and all these structures, ETFs and so on, in order to be able to offer it to institutional investors. So we're seeing here is a bit of a, I wouldn't say it's a tension, but there is a dynamic where Bitcoin is maybe growing up. It's still retaining all of its peer-to-peer aspects, but it's also being, in some respects, rolled into or institutionalized. And that is a big theme, as you'll see, as we go through these panels. And Kelly called the CEO of Backed that Bitcoin is durable and it's accepted as money and currency. This is all validation for Bitcoin, and the space is when they start talking about Bitcoin as an asset class, something they're trying to make ready so they can bring investors into the fold, calling it money and currency. And we're going to take a look at what Mr. Clayton, the chair of the SEC, had to say about all that. But clearly, that is what the Backed people are thinking. And Jeffrey Spector said that he's agnostic on Bitcoin price, and that makes sense. When you are the owner-operator of a platform and a storage solutions, you really are looking for volume. You're looking to provide the best service. You're not so much concerned about the price. And Kelly Lafleur, the CEO of Backed, echoed those thoughts. She said that it's immaterial to what the new platform is working on. The price is being expressed, but there's a lot of missing infrastructure and use cases. The next speaker we had was Ric Edelman. Now, Ric Edelman is very important to this whole conference because he isn't just a investment advisor. He's one of the largest. He runs a very big portfolio. And he gave some very good insights as to how investment advisors are looking at this space. Now, obviously, he's fully interested. He's invested himself. But he made it clear that he has not moved his clients into this space yet. And he says, quote, "I'm convinced cryptos are a legitimate asset class and should be considered in an investment portfolio." And then he went on to mention that there's 26,000 registered investment advisors with $4 trillion in assets under management, and that 600 of those investment managers manage half of those assets. And he says in 5 minutes he can convey to people what they need to know to have crypto in their portfolios. But then he threw down the line that a lot of people were mentioning is how we're very early in this. He said, "I'm not recommending it to my clients because it's the Wild West. I own Bitcoin and Ethereum myself." His point is that the industry, and he's working with others to make this happen, is they need to educate the investment advisors because many individuals are not going to do the research themselves. They're not going to want to hold on to crypto assets. They're looking to their investment advisors to provide them with information and then solutions in order to be able to invest in the space. And he mentioned that one of the things that would be really helpful would be a Bitcoin ETF. He says once you get the SEC to approve a Bitcoin ETF, then it will become a broad-based asset. And he says once we have that in place, we can raise billions and billions, but we need to get to that stage. And the key, he says, is not only to have that, but to then obviously to have financial advisors, not direct consumers, offering these products. So his view is that the real big money is going to come in, and it's going to come in via investment advisors, but that investment advisors need to know more, need to get up to speed in order to push these products to their clients. Now, the next speaker was Mohamed ElErian, and this I found was one of the most interesting presentations. Well, it was an interview, but the thing about Mohamed ElErian is he is not a Bitcoin promoter, and he's not a Bitcoin basher. And he spoke earlier this summer, and I think he said he was intrigued. He thought maybe if the price dropped below 5,000, probably wouldn't drop below 5,000. You know, the price about 7,800, 8,000. Then maybe he might invest. But he wasn't doing the Jamie Dimon and calling it a scam and a fraud. He wasn't being like Warren Buffett and saying it's rat poison squared. He's just taking a look-see. And he mentioned that he came to the conference and he was asked to speak, and that he came with some trepidation, and he was somewhat anxious because he'd given an anecdote how he'd spoken to a group of precious metals traders, and that didn't really go over well. They didn't have much of an attention span. He said they might have been drinking and they really weren't paying attention. But putting that aside, he mentioned that cryptocurrencies probably came about as a result of the global financial system and the payment systems that almost collapsed. And he says that did indeed cause a loss of trust. Now, the one thing that Mohamed did was he, I guess it sounded like just recently, opened an account and he put $400 into it. A lot of people are saying, oh, he's only $400. What's he doing? Well, that's all I guess you need to put in to figure out how it works and to get a sense of it. He's, again, not an investor. He's an observer. Remember his job, he's an economic advisor. He's there to understand. He's not there to tout Bitcoin, but he's also not there to bash Bitcoin. And he mentioned a very insightful thing, that when you have major innovations, he says they go through these cycles of overconsumption and then overproduction. And basically he said that that's what's happened, and that's led us to the point now where we're brought down, and now there's a washout, and then you establish a foundation from there. And then you also get a bit of a change of an investor base. I suppose that's all the retail people getting washed out in this, the people that joined the last 12 months, bought at 12, 20,000, 19,000, 18,000, and pretty much lost 80%, 90% of their money. But that washout then again establishes a base. And he mentioned also that it's hard to value Bitcoin. And we're going to get into some valuation models a little later in the show. There were some interesting points there. But he says that it's hard to determine the Bitcoin's value because it doesn't have intrinsic value. That was his point of view. And then he said, it's interesting, is that it's not an asset class, which was a major theme. A lot of people were saying this is a major asset class, that is a burgeoning asset class. And he said it's not a currency either, which is interesting because many say it is a currency. SEC chairman was saying that Bitcoin is a currency. He said it's not money. He said it was part of the commodity ecosystem with gold and silver. That's quite interesting. But again, you notice what he's doing. He's saying, as all the speakers said, or all the speakers were projecting, that this is going to get rolled into current systems. It may remain on the outside also, with all the bells and whistles of peer-to-peer and having nothing to do with middlemen and trading systems and platforms and centralized this and that. But that they're all looking to bring it into, or they expect it to be brought into, what Mr. ElErian called the commodity ecosystem. And then he said there was growing interest on the institutional side, which you don't need him to tell you that, but he's aware of that, and he's saying that's a good sign long term. And then he was asked by his interlocutor whether he agreed or what he thought of Warren Buffett calling Bitcoin rat poison squared. And he was very diplomatic, and he said that was just a warning about how the price was very high, and I don't think that's what Buffett meant. I think Buffett wasn't just saying that it was a bubble. He was really against it. But he was saying, though, however, he believes that Bitcoin's not going to disappear and it will find its place in the ecosystem. There it is again, that there's this, in his mind, this commodity ecosystem with gold and silver and copper and Bitcoin, and it's going to be in there in some way, shape, or form. And one of the ways it goes in there's copper ETFs, there's Bitcoin, there's gold and silver ETFs, and I think that's what he's thinking. Then they asked him also about the recent comments of Christine Lagarde, who said that, and she said on many occasions, this is not the first time she said this, that maybe central banks have to issue their own digital currencies, and a lot of people have thought, well, when central banks issue digital currencies, it's game over for all these private currencies. They'll just mandate the new currency, the official currency. It'll undermine the private currencies like Bitcoin. And that is would such a move by a central bank validate the cryptocurrency space, or would it crowd it out? And he said, if there was a government blockchain currency, that would validate the private currencies, not crowd them out. He was also asked, what happens, why can't just MasterCard and Visa say, look, this is a good payment system, why don't they just adopt it? Another insightful point he had was that big organizations are bad at self-disrupting. They know how to do things the way they know how to do things. It's very hard for them to undo what they've done and just start over. He says bringing in people doesn't work either. So what he anticipates, and we'll see later in the day these types of things happening, that he expects to see partnerships as the most effective way, i.e. to co-opt and integrate this technology. He also mentioned, which is an important point, and it's certainly more true today than it was a year ago. He says, Bitcoin is not a major systemic risk. I mean, because Bitcoin's worth $75 billion. It can go away tomorrow. It's not going to wipe out the world. Now, when it was $20,000, the whole system was getting close to being half $1 trillion, but it's not there now. Then he made another point, which I think some of you might relate to this. I know I did. Is a lot of this is kind of backtracking off of his Warren Buffett comments. When he was first approached or first learned of Bitcoin, he pretty much dismissed it, scoffed at it, as many do. And the reason he did that is, and it was very typical, and you still hear these arguments being made today, a lot of Bitcoin promoters come at you with the idea that, well, look what happens in Venezuela, look what happens in Zimbabwe, this is going to take over central banks. They give you these scenarios whereby you're supposed to think collapse is imminent, and then the whole world's going to use Bitcoin. Bitcoin will be de facto the world's reserve currency. You're the gold people saying this. They push the same narratives. The world's going to be forced to gold, or, the crypto people. Everyone's going to have to use Bitcoin. It's the currency of the future. Be your own central bank. And that kind of turns off a lot of people who maybe are in central banking or involved, or maybe they have a different perspective. They don't see the world the same way. And so he basically said he was not in favor of cryptocurrency. He was initially negative on it. And he thought that this Venezuelan and Zimbabwe stuff was really not why cryptocurrencies need to make sense. Maybe they make sense in the use case in Zimbabwe or Venezuela, but why are you telling me that here? We're functioning economies, they are not. So why tout these dysfunctional economies as the use case for Bitcoin here in the West, or here in Japan, or here wherever? And he again said the better argument is that cryptocurrencies make sense because they're a useful addition to the current system. Again, there it is, that appendage or this rolling in of Bitcoin into the system, the institutionalization of Bitcoin into the system. And he said he was initially negative on cryptos because people kept saying Bitcoin's going to be the world's reserve currency. And then he said, it's quite humbling, but then I learned. He said, yeah, it's silly to say it's the next reserve currency. And, people who made that and positioned cryptocurrency as that, he says in his mind, made a mistake. So if you look at his comments, he is an analyst of markets. He's not rejecting Bitcoin out of hand, and he's not embracing it. He's providing a roadmap of what he thinks it is and will become. And I think that was a very insightful interview, because it's easy just to listen to people tout the pie in the sky, and then it's also easy to listen to people just trash Bitcoin. He gave a very thoughtful analysis, and one that I largely agree with, that institutions, when they see a way to make money, he didn't say this, but this is what I believe, that when they see a way of making money, and it's not illegal, even if it is, they try to somehow co-opt it, even if it's not a threat to their existence. But in some respects, some people think Bitcoin might be a threat to how they do business. Well, of course they're going to want to embrace that, and they're going to try to extract whatever they can out of it, even if it's antithetical to the whole purpose of having a peer-to-peer currency. And then we had another group of individuals come up, and one of the talks was about whether Bitcoin is a macro hedge. And they did mention that it's harder to argue it's a macro hedge when the price has dropped as dramatically as it has. But Mark Jesco, who is, I believe, he's the CEO of Morgan Creek Capital Management, he says that Bitcoin is still developing, it takes time to utilize, and that we haven't really seen the chaos that we need to see, not that we want to see, but that we need to see if Bitcoin is a macro hedge. So if there's real financial chaos, like for example, if Bitcoin was around during the 2008 financial crisis, I think Mark believes that Bitcoin would be a go-to asset. And he mentioned, and he did make somewhat of a prediction, he said, we'll see as our quantitative easing turns to quantitative tightening in 2020 and a global debt bubble bursts, he says, and Bitcoin will shine. Then we had Mr. Ritholtz of, he's Reformed Broker on Twitter, had a bunch of wealth managers on stage, and they're all positive on Bitcoin. He said Bitcoin, I think Mark Cassidy of Jesco Venture said, Bitcoin is a new category investment. There you go again with the new asset class, talking from a wealth management perspective. Tyrone Ross, the managing partner of Noble Bridge Wealth Partners, made a point where all of the wealth managers that were on the stage with Ritholtz were basically saying, yeah, when we get that Bitcoin ETF, it's kind of off to the races. And he said, whoa, hold on, you know, that's not what got me into crypto in the first place. Why do we want to go back to the system that caused all those problems? And he's essentially saying that that's not the original purpose of Bitcoin, and he wouldn't get one of his clients into that. But, and then Caitlin Long, who was to speak later, she says she loves that way of thinking because, you know, he's saying Bitcoin ETF is not the savior of Bitcoin. However, I commented that the existence of a Bitcoin ETF isn't going to change the ability for people to hold their own keys and keep all the advantages of why Tyrone got into Bitcoin in the first place. Because just because there is that ETF doesn't mean that the people can't continue to use Bitcoin as its intended purpose, and they can trade it, and they can be off centralized platforms. They can do atomic swaps. They can go on decentralized platforms. They can trade peer-to-peer. All that a Bitcoin ETF would do would help boost market cap and bring institutional investors into the space. So it's not, I don't think it's binary that if we have a Bitcoin ETF that it's all over for Bitcoin. It doesn't shut down the inherent features of Bitcoin. And then Michael Sonnenschein, he's the managing director at Grayscale Investments, which is one of the main sponsors of this conference. He said, this is an asset class that's not going away. So, again, institutional investors, he says, will be interested. And then Vaneck, who is currently trying to get a Bitcoin ETF through the SEC, would be the first one. He says, you know, the reason that we're in this is because institutional investors want this. And he says, we build vehicles for hard-to-access assets, and there's none harder to access than Bitcoin if you are an institutional investor. You don't just go out, get a Coinbase account, buy a treasure, and then ask your clients to send you money, and then you're going to load them all up on your treasure. So there needs to be industrial scale security. There needs to be an investment vehicle, a 40 Act vehicle that people can invest their money with you. And he says that the ETF would bring liquidity. The guy's name was Gabor Gorbaks. He's the head of digital asset strategy. And he says that an ETF would bring liquidity and regulatory certainty. And again, he was of the same view as Mohamed, that it's not necessarily going to revolutionize banking. Again, he was talking about the coexistence of Bitcoin as an asset class, and then I guess Bitcoin as a peer-to-peer currency. And Fidelity was represented also on this panel with Ritholtz, and they mentioned that it was because of client interest that they are going to launch this new crypto trading platform early in 2019. So there was a guy there, the head of product development for Fidelity Digital Assets. He also mentioned that Fidelity spends a lot of time educating people. They don't know what forks are. They don't know what airdrops are. So he says they spend a lot of time educating people on those things as well. And there was also a guy there from Goldman Sachs on that panel with Ritholtz. And the customers asked him about, do you have a crypto custody solution? And they don't, but he knows that Bakkt and Fidelity and others are working on those things, and he does see the need for, if there's an ecosystem that they're all saying is going to develop, there's going to have to be regulated trading platforms with surveillance agreements to make the SEC happy, to get investors comfortable. There's going to have to be storage solutions that are sound and that are possibly properly insured. As to how much, they don't know. But then the guy from Grayscale, Michael Sonnenschein, says that crypto is a growing ecosystem, but outside of the traditional financial asset system. You can see that struggle again. They're all talking about how do we roll this product that essentially started as a retail product, cryptocurrency, Bitcoin, that wasn't designed to be a financialized asset, wasn't designed to be in an ETF. It's that struggle you can see in all of the comments. And the reason they want to do it, why? That's their bread and butter. That's how these guys make money. They are Silicon Valley investors. They are wealth investors, wealth advisors. They're investment advisors. They are accountants, lawyers. They are people that are engaged in traditional Wall Street type of activities. And they know how to do what they know how to do, which is a lot of stuff which really is round hole square peg stuff, but it's necessary in order to get the money that can flow from having Bitcoin trading platforms, ETFs, futures, options, storage solutions, and so on. And by the end of the panel discussion, Vaneck, Gabor Gurbatz, the guy who is speaking for Vaneck, announced that Nasdaq and Vaneck are partnering to bring a regulated and fully surveilled crypto options platform next year. Now, that's a big deal because Nasdaq has got lots of experience in market surveillance. Remember, that's one of the big problems that the SEC has, is they don't have these platforms in order to look at prices, price discovery, potential manipulation. Well, that's what Nasdaq is the king of figuring out. And the fact that Vaneck is working with Nasdaq should give the SEC a fair level of comfort. So they announced that partnership at the event. Now, I don't know the details of the partnership. It's just been announced. They've been talking about Nasdaq doing this, but they had never mentioned that it was in somehow a partnership with Vaneck. And then they asked the people, what's on your wish list for the year? What do you want? And of course, the guy from Vaneck, Gabor Gurbatz, said, we're working on the greater institutionalization of Bitcoin and more partnerships and implementation, of course, a Bitcoin ETF. So again, I don't think anyone that I heard during the day didn't either directly or indirectly talk about the institutionalization of Bitcoin as an asset. That seems to be the holy grail, what they're going for. And of course, working with Nasdaq, Vaneck, and then Bakkt, and Microsoft, and New York Stock Exchange. When you have these players, of course that's how they think. They're not thinking how they can do this on a treasure. Then there was another one, a panel that had Anthony Pompliano. Some of you know him as Pomp. He's at Pompliano on Twitter. And also he was there with Caitlin Long. And Anthony didn't get to speak much, but what he did say, they asked him, has Bitcoin did it get its prime moment too early? Meaning, did it peak too early with the 20,000? And Anthony said Bitcoin hasn't had its prime time moment yet. And then Caitlin Long won my heart because she said that one of the big things that happened during the year was when Yale University decided to invest $400 million in a crypto fund that basically was mainstreaming this space, and she called that a game changer. She said Yale was a game changer when it made an allocation to cryptocurrencies. It was a game changer. I love that. And then her main case for cryptocurrency is interesting. She spent a lot of time talking about this, is how the settlement system is really screwed up with stocks and ownership and everything, and that putting things on the blockchain can really clean that up. Then there was another discussion on the future of futures, and they spoke to a woman named Juthika Chow, and she's the Chief Operating Officer of Ledger X, which is a good trivia question because they were the first ones to have a Bitcoin futures that came out before the CME groups. It's been in operation over a year, and they are cash settled. Now, she's going to have to compete, or a company, Ledger X, is going to be competing now with Bakkt and some others, and this is a smaller company. What else we got here? SEC regulations. Now, this was a very interesting discussion because, and I don't know how they arranged this or why they arranged it this way, but Jay Clayton is the chairman of the United States Securities and Exchange Commission. And the panel that he was on was just himself and a guy who interviewed him. You're like, well, why? You know, they could have gotten one of their reporters. They could have got, they could have gotten a CoinDesk reporter. They could have got a Wall Street Journal reporter, New York Times reporter, as they had for some of the other interviews. But instead, they picked a guy named Glenn Hutchins. He's not a household name, but he's a very big player because he's the chairman of a very large investment company, North Island. But he's also a director, which he didn't mention. Thing. He's a director of the New York Federal Reserve. He's a director on AT&T. He's a former Nasdaq director. So this guy's about as connected as you can get in the mainstream financial. I mean, if you're on the Federal Reserve board or you're a director, you've been with AT&T, Nasdaq. I think he's also a member of the Council of Foreign Relations. But that's not, they didn't play him up that way. They just brought him up there like he was some kind of folksy guy that had some questions that he wanted to ask the commissioner. And he asked a very good question. It was a very enlightening conversation. And they went through first whether Bitcoin is a security. And basically claiming this is no, Bitcoin is not a security. And he gave a very concise reason why Bitcoin is not a security. And he also mentioned that the remarks that he made, and that I'm going to half repeat or paraphrase here, are not his own, but basically if they reflect his thinking, I'm sure they reflect a good portion of the Securities Exchange Commission's thinking. I'm sure he's not Dr. Jekyll and Mr. Hyde. And he mentioned that blockchain has incredible promise in the infrastructure, not just in financial assets, but across the world. So clearly the SEC is not against cryptocurrencies. And he said the blockchain could drive efficiencies. And again, that's one of the goals of the SEC is investor protection and efficiency of capital markets. And if cryptocurrencies can be offered to investors with the same level of protections and they can make markets more efficient, then obviously he's all for it. And one of the things he said was, how can we approve what we're doing without degrading investor protection? And then he went into his definition that when a digital asset is used as a currency or as a replacement for sovereign currency, well, then it's not a security. It's more akin to a currency. And he mentioned that a dollar and a yen, they're not securities. They're not commodities. And then he mentioned that he highlighted the decentralized nature of Bitcoin as to why it's not a security. He says no one creates them for their own control, and it's a payment system, and it's in a sense a replacement for a sovereign currency, so it's not a security. It's not centrally created, and no one has the right to create more. And no one gets rich off of issuing the Bitcoin. Then Hutchins mentions to him, as far as the Fed is concerned, and he wasn't, again, speaking for the Fed, he was talking in the third person. He says that their view is that since Bitcoin is not legal tender, it's not the liability of the bank, well, therefore, it's not a currency for the purposes of the Fed's jurisdiction, which is interesting because it's a currency for SEC purposes, but it's not a currency for the Fed to look at. And then, of course, it's a commodity for purposes of the CFTC. So Bitcoin is a lot of things for a lot of different people. Then they got on to ICOs, and again, a lot of people are thinking the SEC is cracking down on ICOs, they're all going to go away. Yes and no, possibly. What he's saying is ICOs are not per se problematic. It's that when you issue an ICO and you don't have it registered, well then, that is a problem. But going forward, it's not a problem, and I'll explain why. He says the definition of securities is the 33 Act definition. One aspect could be, is it an investment contract? And he described that as somewhere where an investor gives someone money with the expectation of a return. And that return is going to come from that person that you gave the money to is going to do something to make sure you get some money back. Well, that would make it a security. And that's classically what a token is. You give money to an issuer of the token and you say, okay, here's my money, now go and do something and make my token rise, or get me a dividend, or whatever it is that you expect that person to go and do. So he made clear that when you just have a currency, it's decentralized, no one controls the supply, no one's making money off of it, then you're fine. Then it's not subject to the SEC whatsoever. However, he says, if you're going to issue a token, he says, start with the assumption that it's going to be a security. And what does that mean? Well, if you're going to issue securities, by definition, securities under the Securities Act of 1933, they either have to be registered with the SEC, or you have to have an available exemption and you have to apply for it. But what happened in 2017, many companies, all they did was issue tokens and didn't have them registered at all. Well, the SEC recently brought an action against two companies. I don't know the names of them, and they found that they had issued these tokens and these ICOs not pursuant to a registration statement. They never brought their stuff to the SEC and said, here, take a look at this. Let's look at the registration statement, declare it effective. They never did any of that. And so what they said was, your penalty is you got to give the money back. That is one of the remedies is rescission under the securities laws, is that the person who bought the security has a put. They say, give me my money back. Now that's an important thing because many of these ICOs, I'm sure the two that they're talking about, I don't know the names of them, but most likely they were issued at, let's say, $100 and they're now worth $2. Well, you want your $100 back. Now the problem is, I don't know if these companies are going to have the $100, but we'll see. But he also mentioned, and again, this is very important, that the SEC set up a website at sec.gov/ICO. He says that'll show you how to get guidance to register your ICO. He says we are happy to engage in this space. So again, it's not like the SEC is against cryptocurrencies, it's against ICOs. No, they want to institutionalize them, bring them into the fold. What are people used to? Bankers, lawyers, Silicon Valley investment angel investors, the whole structure where you then, the venture capitalist funds a company, then they raise a few rounds, and then they, through private placements, they get cleared in compliance with the SEC. Then they decide to go public. They hire bankers, lawyers, and accountants. They put the registration statement to the SEC. The SEC goes through rounds of comments, and then finally there's a public offering. The SEC declares the registration statement effective. That's the procedure and the process that everyone knows that's in the money game. And that's what they're looking to do. They want people not to do an ICO, write a white paper, and then hire some guy on YouTube to tout it or some celebrity. They want it to go through the normal institutional channels. Again, back to that institutionalization of ICOs. Now, there's a big incentive there because I think there were $4.2 billion in ICOs last year. Wall Street didn't get any of that. The SEC didn't review any of those white papers. If they do, they're reviewing them now, but for the purposes of bringing enforcement actions, not for the purposes of having them registered. So basically saying, look, start with the idea that you are issuing a security and therefore come to us. Let's talk about how your registration statement might look. Then Glenn Hutchins asked him, Clayton, well, we know now that Ether, Bitcoin aren't securities. They had a little more trouble getting to Ethereum because maybe they thought initially it might have been a security, but now it's so been decentralized that there's no one benefiting from it. Glenn asked him about, what about XRP, meaning Ripple? And he didn't answer at the moment. Now, there might be problems with XRP. I haven't dug into that one enough, but I know that there is somewhat of a centralized issuer. Now, maybe they don't make any money. I don't know, but that one's going to be a bit more tricky. It's not as easy as Bitcoin. So basically, if you want to do an ICO, you're going to need the full raft of investors and Wall Street bankers and lawyers and accountants. just like you were if you're going to do an ICO. I mean, an IPO. Now, the interesting thing is, I noticed someone sent to me, this is what Bloomberg said. Bitcoin ETF roadblocked by lack of safeguard. That's the headline in Bloomberg. That's fine. But the Twitter headline was just in, which wasn't just in because it was 3 hours later, because this was at 6:35 p.m. and the interview that I'm talking about between Glenn and Mr. Clayton was at 3:30. But it says just in. The head of the SEC says lack of investor protections makes it unlikely that his agency will approve a Bitcoin ETF anytime soon. Did not use the word unlikely. He did not use the word anytime soon. Now, what was in the article was correct. The statement that he did make was, this is exactly what Mr. Clayton said. What investors expect in that the trading in that commodity that's underlying the ETF is trading that makes sense, is free from the risk or significant risk of manipulation. That's clear. That is a goal of the SEC, to make sure that the investor is protected. That's exactly what he said. And then he said, those kinds of safeguards don't exist in many of the markets where digital currencies trade. That is a fact. That is what he said. That is also true. But he didn't say, and therefore, at least I didn't hear it. He didn't say, and therefore it's unlikely his agency will approve a Bitcoin ETF anytime soon. I think they correctly stated his facts, or what he said, and what he said is factually correct. But and you'll see when we get down to the comments from Vaneck that there was never a timeline given, either a negative timeline, meaning that it's unlikely anytime soon, or one is imminent. There was no time, as far as I can tell, and maybe I missed something, but I did not hear Mr. Clayton say that nothing's happening anytime soon. All right, let's see. What else did we have? I think that's it for Clayton. I'm looking at my notes here. Yeah, my notes on why there's not a Bitcoin ETF were similar. I had those quotes that Bloomberg mentioned. Was that he's primarily concerned with investor protection, and they need to make sure that the trading in the underlying commodity, meaning they're calling it the commodity, Bitcoin, even though he called it a currency earlier, is free from manipulation and that there's good custody. Those are the two things. That there's proper price discovery that's free from manipulation, not that there's not volatility, but there's proper price discovery, and that there's good custody. And we're going to see what the Vaneck guy said, the president of Vaneck, later on about both of those points. And then here's what I have him saying. Many of the exchanges where Bitcoin trades don't all have proper safeguards or surveillance. That is a reason not to approve the Bitcoin ETF. That has been the reason not to approve the Bitcoin ETF. But he didn't say, and it's unlikely that anyone will be approved soon. At least, again, I didn't hear that. Then, kind of on a side issue, Glenn asked him, well, what about this Nasdaq? Because remember up above, we talked about the new partnership where Nasdaq is going to do options agreements, and they're going to have prices, and Nasdaq knows how to do surveillance, market surveillance, and he says, let's see how this evolves. So he didn't say, yeah, and once Nasdaq is up and running, then we have all we need to know, and we're ready to approve an ETF. But he also didn't say, I don't see anything being approved anytime soon because there's no markets that have proper surveillance. What he said correctly is, there are many markets in which there are not correct market surveillance agreements in place. But as we'll see in a minute, there are some that are indeed, that will have and do have the proper market surveillance. And again, that could be backed, will have it. Coinbase may register as an alternative trading platform. They'll probably have it. The Nasdaq futures will have it. So, and as we'll see, there's certain over-the-counter exchanges that have cooperated with Vaneck to provide information on pricing. Some of the ones, like I think it was Galaxy or Genesis, not sure which one it was. Then we had some talk about Bitcoin scaling, and a gentleman named Spencer Bogart. We're not going to go do a deep dive into this, but he gave a very interesting way of looking at the debate over scaling. He broke it down into two camps. brute force versus elegant approach. Brute force is basically you make the block size bigger, you can do more on the chain. However, he mentioned that the greater the centralization of any blockchain, the less secure it is. And when you do larger blocks, you can't, first of all, you can't fully scale to the Visa level anyway. And second of all, that would lead to greater centralization because a lot of people won't do the big blocks. So the brute force he thought was, he's calling it brute, pretty clumsy. And he mentioned instead the elegant approach. He didn't mention Lightning Networks, but I think that's what he was talking about. The bundled layer architecture. And he gave a very good analogy. He says, instead of trying to run as many transactions through all at once, you do it off chain, and then you bring the as one transaction back in. He mentioned it like running a tab at a bar. So imagine you're at a bar, and let's say it's just you, and you order 6 drinks. You can run each drink through, and then everybody in the bar runs each drink through. You could fill up the block pretty fast. But if, let's say, I'm there, and the reason I have 6 drinks is because I'm in a party of 6, well, now it's one transaction for 6, and let's say we all have 3 drinks. Well, he runs a tab, 18 drinks get recorded as sold, but then they only have to go back to the block and put in one transaction with the 18 drinks on it. So he was arguing for the elegant approach, it seemed like. Then we had a guy talk about valuation models, a guy named Willie Wu. He's a cryptocurrency researcher. He was with a guy named Chris Berniski. And they talked about, there's a problem. How do you value cryptocurrency? What's the valuation? At least with Bitcoin, they like to look at the transaction volume, and that's what gives the network a total value, and then you could figure out that per coin, which I thought was a pretty clever way of looking at it. There was an announcement on the formation of a group called ATOM, Association of Digital Asset Markets. From what I gather, it looks like a lot of market makers, Bitcoin OTC platforms, they joined together, they created a code of conduct, but they say they're not a regulating organization or a lobby group, but it just sounds like it's a bit of a way of getting together and best practices type of group. All right, so at the end, they had the guy from Vaneck come on, and this was not the guy who's running the day-to-day stuff that we heard from earlier, but this guy's name, I think, is Jan Vaneck, president and CEO of Vaneck Securities. Now, he didn't seem to be, and just listening to his vocal tenor and his body language, he didn't seem to be thinking or overtly that he's going to get his ETF approved. But they asked him some direct questions, and he gave as much information as you might imagine as he could. And he said they asked him, is market manipulation a legitimate concern for approving an ETF? Now, it's kind of a loaded question. Of course it is. They're not going to approve. It's got nothing to do with Bitcoin. It has to do with if there's any market where the SEC feels like there's manipulation going on, they can't even tell that it's going on because they don't have agreements in place to surveil the market, then of course it's a legitimate concern. He pointed out that he's not sure, however, what level of comfort he has to get to. Because if he can source prices from exchanges that have the proper surveillance in place, what percentage of exchanges does he need? It's a very important point. See, the Bloomberg article, I think, just glosses over there. They don't have the surveillance of many markets. Yeah, okay, we know that. There's people right now that are trading gold in a bazaar somewhere in Saudi Arabia, and the price is all screwed up and maybe messed up or whatever. And all over the world that happens, but they know that they have certain exchanges, the gold and silver people will say it's not true, that at least if there is manipulation, they can actually take a look and find out what's going on there. They're comfortable with the markets that are available on the COMEX, LBMA, OTC, and so on, that they can do a gold ETF. That doesn't mean that there aren't markets where they wouldn't be comfortable. See, I think that's the misleading thing, and that is what Mr. Vaneck is concerned about is, okay, how many of these markets do we need to have that we get our prices from that actually have good surveillance in place? Because he's kind of saying we have some. And, how many is important. They haven't given him that guideline as to how many. Now, as to the custody concern, remember those are two things, the pricing and the custody. Mike Bessley is the co-founder, chief executive officer of BitGo, he says, look, we've got a lot of good solutions for this. This is just a matter of technology, and he says this can get solved fast. Okay, so now we're back to what's the problem? The problem is on the price and the manipulation, because the custody seems to be there. And Vaneck was musing about, well, how much do we have to put aside for reserves, for stolen? You know, obviously, we're not going to put a one-to-one correspondence. He's making it sound like he doesn't have the guidance he needs, but that they're trying to meet the SEC on these issues. So what are the capital reserve requirements? Then they asked Mike Belshi, the chief executive officer of BitGo, what does he think 2019 is going to be looking like? And he says it'll be institutional offerings coming on board. He says 2019 will be the year of the on switch, he said. And Mr. Vaneck said, well, we're not necessarily waiting for the on switch because adoption will be slow unless there's a bull market, which is interesting. If there was, it's almost like he's saying, had the bull market continued into the end, roared into 2018, it almost makes it sound like maybe Bakkt would have launched, or there'd be more interest in cryptocurrency. So not quite sure how to read into that, but he said this is going to be a multi-year process as to how all this works. And then he went back to, okay, so if it's pricing and custody, those are the two things we have to satisfy the SEC on. He's making it sound like I don't really have what I need. I don't know how many exchanges I need to have with the right pricing, surveillance, and what type of custody and what type of capital requirements. He's making it sound like he didn't know exactly what, like they were moving the goalpost on. It wasn't quite clear what he was saying. And he says, look, we even got OTC market makers to give us price information. They were very helpful. But then he's saying the SEC hasn't really defined what the finish line is. But he said that the pricing problem is fundamentally solved. Now the question is custody. Well, that's a very telling statement, because I thought it was the pricing that they didn't know because they didn't have the proper surveillance. So now it sounds like maybe they have their surveillance. But if you just go back up to what we were talking about from Mike Belshi, the chief executive officer of BitGo, he says the custody stuff is a piece of cake. He didn't say it was a piece of cake. He said we got a lot of good solutions. This will get solved fast. So it comes down to, where are we? Is a Bitcoin ETF, have we solved the threshold issues of market surveillance for price and custody? If so, you could see, you know, once Bakkt is up and running, that maybe the SEC, Mr. Clayton and his crowd, will approve of a Bitcoin ETF. Or maybe they won't. Hard to say. But one of the things that I see is that there's so much money and effort and interest in doing this that it's almost, if there's a will, there's a way. And you don't have a guy, Clayton isn't saying, I hate cryptocurrency. I'm going to arrest everybody in this room. We don't want this to go forward. He clearly is being helpful. He's saying, we're happy to look at your ICOs. We want to bring ICOs. So I would imagine he also wants the ETFs. But again, his job is not to be everybody's buddy and to prove and make everybody happy. And maybe that's part of his job, but he needs to make sure the investors are protected. So I think he's going about it the right way, and we may be pleasantly surprised at the outcome. And let's see, final comments on this. So he says he's got enough market data with market surveillance data, says John Vaneck, to get the SEC comfortable. That's his words, that he thinks they got that. Now it's just down to the custody. Well, looks like the custody is more of a technical issue. That should be easy to solve, I would imagine. And then he said, I like the spirit here. Now, this is a guy, this is his first crypto conference. He's not a crypto guy. He's Vaneck. He's an ETF guy. He's probably knows more about different, or at least more than passing knowledge of many different industries, because he's got to roll up all these different commodities and securities into ETFs. And he says we have a long way to go, and the regulatory process is frustrating. Now he's kind of sounding like we're not ready to go. But I'm excited for the crypto world, but maybe not the regulatory side, he said, in 2019. And then he made a nice statement. He said 2019 will be the year of singles, not home runs, so managing expectations there. All right, well, let's see what you guys have been saying over in the corner here while I've been filling you in on this conference. Hello, what is better, a Trezor wallet or a Nano S, and what's the quick difference? From what I understand, they're both hardware wallets. They're both. It's really just a matter of personal preference on what you want to. But I believe you should have a private custody storage rather than storing the coins on an exchange, unless you're going to trade them right away. Percent Eagle says, hi, I like the treasure, but I have no experience with Nano S. All right, let's see. What's going on with the gold silver ratio, says Bezerdex. We'll cover that on another. We're getting a little long in the, and I'm surprised that YouTube hasn't cut me off yet. I usually get interrupted at least once per live stream. We'll cover that another time, the gold silver ratio. Let's see what else have we got. When will we have the next crisis? We're going to skip that for now. I'm not trying to blow through your comments. I just want to stick to the conference for now, Benz and Drex. Okay, the best time to get into Bitcoin is when everybody says Bitcoin is dead, says tossing Molotovs. That's generally the case. If you believe that Bitcoin is done and finished just because the price went down, and maybe it is, then it's done and finished. But if you actually think it's going to be around and they're going to push through all these initiatives and get investors and institutional investors involved, well then, where's it going to be 2, 3, 4 years? I don't know, but I'm not sure that it's dead. Not after what I heard today. There's people that have invested so much time, energy, intellect, money. They want this to happen, it sounds like. All right, Bitcoin. Let's see, equals BitFBI. Hi, Seth is here. Seth wants to make a big purchase of Litecoin. Litecoin may go par with silver, says Pablo Pena. Will Bitcoin to gold? Who knows? Right now, I mean, they'd say is Bitcoin is gold and silver is digital Litecoin, or vice versa. Bitcoin is at, what is it right now? Bitcoin is outdoing gold because Bitcoin right now is about 3,800 and gold is 1,222. Litecoin's about $31 and silver is about $14. So they're both about 3 times the price of their so-called respective amounts or respective commodities. Tossing Molotov, Litecoin doesn't have the use case as Bitcoin. Okay, let's see. DBC is here. Okay. All right, I may wrap this up here because I think there's a lot here that we could discuss. There's some good comments here, and I wouldn't be able to give them all justice because I'd roll through them. So I want to wrap this up, and then we'll see you again tomorrow night, and we'll go back to the precious metals probably tomorrow night. Then we can talk about the gold-silver ratio or anything else you want to talk about after the initial monologue. So I want to thank everyone for joining, and I hope you all have your Smaulgld rugs, and maybe you've been enjoying a beverage in your Smaulgld mug during this presentation. But if you want to get a Smaulgld mug, just head on over to smaulgld.com. Check out the mug offerings there. The classic and super classic mugs are ones that I will deliver to you personally from Smaulgld headquarters. The beer mug and the travel mugs you got to order from the manufacturer, but you could also visit the Smaulgld store there. Also consider shopping at the Smaulgld affiliate links. Buy your gold and silver, non-investment device to do that. But if you're going to do that, you pay no more, no less than if you visited those sites directly. That's Money Metals Exchange, Golden Eagle Coins. By the way, Golden Eagle Coins has these wonderful looking, there you go, Litecoin, Bitcoin, and other cryptocurrencies in solid 999 silver. So you can check those out when you go to the Smaulgld website, or below this BitChute or YouTube. You can check out the offerings there. And let me just leave you with a picture of those wonderful Smaulgld mugs. This doesn't include the new beer stein or the frosted mug. You can check those out. But the two to the left, the Smaulgld Super Classic red mug with the red handle and the Smaulgld Classic mug to the right, both are available directly on the website. You go there, you can pay with PayPal, and I will deliver those to you tomorrow morning. Also, if you want to pay in Bitcoin or Litecoin, there's the ability to do that. Just figure out the amount you want to pay in Bitcoin or Litecoin. The addresses are on the Smaulgld site. And just make sure you shoot me an email, smaulgld@gmail.com, and give me your address and tell me that you've paid for your mug, and I will ship it out. Thank you very much, and we will see you tomorrow. My mug comes this Friday, says Pablo Pena. Okay. Excellent. Please take a picture and send it back to me. Good night, Max. All right.